Happy Friday out there, Team 42. It's your skipper here, Darius to present our macro minute for Friday, July 5th, 2024. As always, we'll start with the executive summary from today's lead-off morning note. If you would like to review the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So today's key macro events are cracks are turning into crevices in the U.S. labor market. In terms of market implications, the June jobs report was supportive of our view that U.S. economic growth is slowing and likely to continue slowing over the medium term. The key implication for asset markets is straightforward. Investors focused on relative performance should continue overweighting defensive sectors and factors in lieu of their cyclical counterparts, in line with Dr. Mo's proper trade recommendations over the past few weeks. The implications for investors operating in the absolute return space are less straightforward. On one hand, crevices in the U.S. labor market are not to be summarily dismissed, given the threat to consensus positioning that a U.S. and by extension global recession represents. On the other hand, the market pricing in more and sooner rate cuts is bearish for the U.S. dollar and bullish for global liquidity. We reiterate the lack of conviction espoused in our July 3rd lead-off morning note. If there is a signal to interpret from our lack of conviction at the current juncture, is that investors should not be leaning too heavily in the bullish or bearish camps at the current juncture. Beware of research partners that operate with maximum conviction all the time. Selling snake oil gets them paid, not you. Transitioning to our 42 macro dashboard here, as always, a wrap up with a question from our community. This one's titled Crypto Dump. It says, Darius, can you please talk about crypto dumping? What things can contribute to its recovery? Thank you so much for your time. So thank you. We appreciate you as well. So, this is a great opportunity for us to talk about how we think about risk management very differently than how most of you think about risk management, and why our orthogonal process has been so additive to our clients over the past few years. One, we don't care that Mt. Gox is dumping crypto. We don't care that chickenpox is dumping crypto. We don't care if a can of Campbell's soup is dumping crypto or pumping crypto. What we care about are critical inflections in volatility. So allow me to pull up a chart from our leadoff morning note today. These charts are always in our every piece of research that we publish, because we want to remind clients of the efficacy and the strength and the lucrativeness of our signals. So with respect to crypto, this is the volatility adjusted momentum signal back test for crypto, for Bitcoin specifically. And as you can see here, 98% of Bitcoin's return cumulative performance since the inception of the asset class has come when our signal has been bullish from the perspective of its volatility adjusted momentum signal. Only 6% of Bitcoin's cumulative performance has come when our VAM signal was neutral, and minus 2% of its performance, cumulative performance, has come when Bitcoin is bearish according to our signal. And so for those, I tweeted about this morning, but our crypto signal went from bullish to neutral middle of last week. We cut our position in half in our case portfolio construction process as a function of that systematic process, that rules-based systematic process that's helping thousands of investors around the world make a ton of money, and has been for the last couple of years. And then we cut our position in Bitcoin all the way down to zero on Monday, ahead of the big dump that we're seeing here this week. So I want to say Bitcoin's down about 10 or 12% this week. So just be aware of that. If you think about this in regime terms, one of the things that we do for our clients, probably the most impactful thing that we do for our clients, particularly our buy-side clients, is help them identify and position for the market regime. And so if you look at the market regime back test for Bitcoin, 112% of its cumulative performance since the inception of the asset class has come when it was in a risk-on regime, versus minus 12% of the cumulative performance has come when it was in a risk-off regime, i.e. it's negative return. It has more than the cumulative performance has come in a risk-on market regime, which means our market regime nowcasting process is generating alpha in Bitcoin relative to other processes. So, I just want to keep this, I want to just make sure investors are well aware of these statistics, because at the end of the day, I keep harping on this, and this gives me an opportunity to kind of end on a good note, which is, you don't need to predict the future to make lots of money in asset markets and save lots of money in asset markets, any more than a pilot needs to predict the weather to fly across the country. What you need to do is be paying attention and responding to critical inflections in momentum in real time with changes in your portfolio, so that you can stay on the right side of market risk as it develops. You don't need to predict how many coins Mt. Cox or Mt. Gox or whatever these people are need to dump. You don't need to predict dealer gamma positioning. You don't need to predict CTA positioning. You don't need to predict your mom's, uncle's, brother's, cousin's next two trades for next Thursday or Wednesday because Eddie Murphy told him so. You don't need to predict any of that. You just need to pay attention to changes in volatility and changes in price, because those are the two factors that every single investor in the world uses to manage risk. Some percentage of investors use technicals to manage risk, i.e. price. Other more sophisticated investors on the buy side use volatility, different volatility systems to manage risk. That's why we call it our volatility adjusted momentum signal, because that allows us to spot critical inflections in the behavior of every investor, not just one small pocket of investor that makes you sound super smart because you're drilling down into a rabbit hole and not paying attention when the train smacks you in the face like it is doing in Bitcoin right now. So I just want to make sure investors are aware that we have some incredibly powerful tools. They're not perfect. I don't purport that they're perfect, but they're a hell of a lot better than what we're seeing investors doing and using out there. And we're super proud of that. And we're super proud of our growing audience. And we just want to say high five to all investors across the global investor community, the thousands of investors across the world that we continue to help make and save money in asset markets, because they have found a better way to invest. So we'll wrap it up there. Darius Dell presenting our Macro Minute for Friday, July 5th, 2024. Everyone have a wonderful day out there. Best of luck. We'll catch you back here next Monday. And oh, by the way, we got our July 2024 macro scouting report presentation coming out to be in client inboxes this afternoon. So if you do want to predict the future, if you are in the business of predicting the future, I dare say there are a few that do it consistently better than we do, and we have proven to do over the past few years. You can check out the Big Wins playlist in our YouTube channel for more indications on that. So everyone have a wonderful weekend. Catch you back here on Monday. Cheers.